How's it, guys? Welcome back to FX Rhapsody. Today we will be looking at two pairs. We're going to be looking at the US dollar Swiss franc, and we will also be looking at the US dollar Canadian dollar. Okay, guys, before we move on, go visit my website, fxrhapsody.co.za. If you scroll down, you get all your new videos that I post in my blog here, and all you can do is just click on the image and it will take you straight to the video of the previous day. You can see on the side pane here on some very cool features, some news feeds, economic calendar, your trading view platforms that you can click on and go into. Also your video categories. If you're getting started in trading, you just click on the video category over here and it will take you straight to the page of all the videos that you need to watch about trading, how to install MetaTrader, introducing trading, and so forth. And then also you get all your other, your strategies and analysis. And let's get trading. So all these videos are nicely dotted out for you. All you need to do is just click on the description. It will take you straight to the video. I've also got my brokers. If you click on the broker tab, you can see that my preferred brokers are over here. IFX, nice ABOOK broker. If you don't know what it is, just click on the tab. It will tell you exactly what a ABOOK broker is. These guys are brilliant. Minimum deposit of $10, 50% welcome bonus. You can deposit via Ozo, PayFast, School, Bitcoin, and more. They've got amazing spreads. Just click on the spreads and it'll tell you exactly what the spreads are. So click here to join the family, and then also the resource tab, which I explain in my videos every time. Just click on the resource tab, and then you can get a candlestick cheat sheet, and then also the commitment of traders. All you do is download it to your mobile phone, to your laptop, to your MacBook. But let's start off with the US dollar Swiss franc. I just see a nice little opportunity that arises in this pair. So on a monthly time frame, it's just gonna have a quick view to what's happening here. So you can see this formation forming here, and then this ascending trend line over here. So a break of that is imminent. So price might break, retest, go down, break up, retest, go up. So any of those two is possible, but I want to get to the weekly time frame, and then I just want to show you right here. So basically you can see on the weekly time frame, like you saw the ascending trend line going up. I'm not going to draw that. So basically we see ourselves sitting with this scenario. So we can draw the Fibonacci from the low to the high. So you see the swing low to, let me just draw it from this one here. There we go. That's the one I was looking at. So you see it from the swing low to that swing high, and you can see price retracing nicely to the 62% Fibonacci retracement. So let's highlight that area there. So that's a key area. So obviously from that area, you place your buys. But again, this is weekly. But now you see this little downwards swing over here. So let's take our Fibonacci from this swing to that swing. And you can see this is also still falling nicely in our 62 to 79% retracement area. So this pair is sitting on a key area now for a nice little buy to the upside. But again, more confirmation needed. Let's have a look at the lower time frames. And again, I'm just drilling down to the daily, but you can drill down further to the hourly, and even if you want to scalp it to the lower time frames. So basically, like we've seen now, let's draw our Fibonacci. Let's take it here from this. Right, let me just, there we go. That's basically where we took it from, just to get that 62% right there. So you can see this 62%. It is also falling nicely in this little bit of a support area, if we can say that. There's still a little bit of liquidity that's lying below here. Price not tapping that yet. Let's just mark that out. So right there. But then also if you take your Fibonacci, like we've seen now, we've taken our Fibonacci from here as well on the weekly time frame. So you can see price falling nicely in that 70. But now keeping an eye on this pair, because if we keep the Fibonacci from this big swing to that big swing at the top, so it's the low to the high, all right? So if we keep it there, we can still see there's all this, the big area at the bottom here. I'm just going to highlight this area right there, the 79% retracement area. So that is why I say it's key just to look down to the lower time frames, because this is still a big area. So we can still see price going into this area over here, just pushing down ever so slightly. You know, if we can see price just pushing down, tapping both liquidities, and then gear up for a nice, gear up for a nice little buy to the upside. Okay, that's going to happen. Or, like I said before, just now, that's our second scenario. Or our first scenario, second scenario. So you just keep an eye on your lower time frames just to make sure that your entry is perfect. Snipe those lower time frame areas and then see what happens. Let's have a look at the COT reports. What does it say? What is the big banks and institutes doing? So you can see here that a lot of longs, there's about 1,200 longs being closed in the market. So, and a big amount of shorts, not big, but I mean, it's still pushing this net position to a bigger negative. So, which means is the Swiss franc is basically getting weaker. So you saw that over here, there was a slight little push. So the price went down, and then you can see now the guys are gearing up for a nice little buy, pushing it and making it weaker. So you can see this movement to the upside definitely happening. It's just a case of when is it going to happen. So just have a look at those lower time frames just to confirm that swing in the market. Right, let's move on to, what did we say we're going to do? The dollar, Canadian dollar, US dollar, Canadian dollar. So let's start off with the monthly time frame. So on the monthly, let's let's just do that. Just want to drill it down. There we go. Just have a look at the big monthly picture. This is now going, this is now going back a long way. So you can see that just a rough little zone that I pull in there. So you can see that zone has been retested a couple of times. It came and retested, came up, and now it's doing a little bit of a retest or retracement there now as well. So you can see if you take your Fibonacci from here, from this low to that high, you can see price falling nicely in that area. So you know, we're expecting on a monthly time frame maybe for a movement to the upside. This could also just be an indication. Price could also just come again and test and break that area of support and move to the downside. So again, you know, anything is possible. So let's just have a look again. Always go to your lower time frames, like I said, just to make sure, you know, of what your thinking is. On the weekly, it's basically similar to what we were saying in the monthly time frame. I just wanted to let's draw our Fibonacci first. So that's from the low to the high. You can see that price now is sitting right there. This is a key area as well, like you can see here. So that's falling nicely in our 70, you know, price tapping that 70%. So we're definitely looking maybe at price moving up. And also again, guys, price could be moving to the downside, because let's just take this Fibonacci out. And let's take that out. Let's draw that. Just wanted to show you something here. So you get that swing at the bottom, at the top, and you get that swing low. Price came up. Let me just take this out. So price came and retested this area. So if you were a swing trader on the weekly time frame, you would have, like I've said before, place your entry there by the 62% on this candle. Price pushed up, did not reach that take profit at the top. This is now the way that I show you guys to trade. And then you see price moving to the downside. So there is still this this area over here with liquidity. Like I've said before, there we go. So price might move down to the downside still, tapping that liquidity. And look at that. So that is all the areas of your target that we see. So again, like I said, we see that prices in that zone, retracement zone on the other Fibonacci, they can go up. But again, price might just still go and tap that area over there, and then maybe just still carry on moving down to the downside. So going to your lower time frames is always crucial, guys. Analysis is just to see what the market might do, which direction it's going to go, just to give you an overview of, not to be biased or anything, just to look at where it wants to head. Oops, daily time frame. Let's have a look at what the daily time frame is saying. Expand it a little bit. So again, we're just looking at, both directions. As we can see on the weekly, anything is possible. Not anything is, well, anything is possible in the market. But again, just wanted to highlight that this key area over here, like we've seen now before. I think let's just have a look. It's right here. We see this movement to the downside. We see that. Okay, I just wanted to highlight that area. Like I've said before, that these areas where there's a big bearish run, there's this bullish candle in between. It forms a resistance or a support. Not a support, a support. So basically you can see this area over here. That's a key area. So basically what I do is I take my Fibonacci from this swing there all the way down to this swing. So what we might see is the following. We might see price pushing up to the 62%. So we might see price pushing up slightly into that area before maybe selling off to the downside. Okay, so this is basically for the shorter term. We're looking at about a 50 to 80 pip. Let's measure this. 50, 60, 70, 80. Yeah. So anywhere between 50 and 80 pip moves maybe to the upside before selling off to the downside. And then obviously going to clear some liquidity that's still lying over here and so forth. So for the Canadian, or for the US dollar, Canadian dollar, just keep an eye on this area over here as well. Just wanted to take this out. Before any movement happens, we need to, on the daily, this needs to be confirmed. That break over there. So we need price to break that area. If it breaks and closes above that area, we know it's going to be a buy just up to that upside. So let's keep an eye on it for the beginning of the week, and let's see on the low time frames what's happening. COT reports, we are looking at the Canadian dollar. Let's move up. There we go. So the Canadian dollar, we can see that a lot more longs have been opened. There has been shorts that was opened in the market, but a lot more longs have been opened in the market. So it went from a net position of negative 27,000 to a quick negative, well, let's call it 11,000. So basically what it means is if the Canadian dollar strengthens, it will definitely move to the downside. So we're definitely looking for a sell, but when that happens, it's going to be, it's going to be up to the market to tell us that. Like you see, there's a little bit of shorts being placed in a little bit of longs being placed in the market. So we might see that movement to the upside, and before it moves down. But again, let's keep an eye on the lower time frames. So guys, that's all from my side. I really hope you enjoyed this analysis. If you did, just don't forget to press that like button. Comment in the comment section. Let me know what you think. Also, just don't forget to subscribe if you enjoyed this. Hit that notification bell for more video content that's coming your way. Guys, I hope you're having a wonderful weekend. Stay safe and happy trading, guys.